Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. I'd like to offer you some foreign exchange charts. And the first one I'd like to look at is the euro. Now, if we look at this chart, we can see an immediate countering combined bearish harami and bearish double yesterday. This seeming indecision on the larger scale was again prompted by the market primarily getting caught in between the April 2018 low at 122.12 and the March 2018 low, which is below at 121.52. We also have congestion below seen in the mid-December area from the same March 2018 low down to the 120.75 area. So far today, not much. A market trading either side of the March 2018 low, but staying close to yesterday's close. The next chart to look at is cable, aka sterling against the US dollar. A higher but bearish black crow yesterday as the market rode up once again to test the middle time, currently 136.80, the important late June to late September bullish shift pitchfork. Now this pitchfork has run this market's bullish angle of attack since late September and doesn't look happy giving up the middle time. Additionally, one could look at the last 2 days action as a possible tweezer top pattern, though we'll have to look for any follow through lower to justify this idea. Finally, please remember that the recent highs at 137.04 and there's not much above it until the 140 even era, and even then that's not that strong. However, if we breach that high at 137.04, then we have the chance for a weekly key reversal this week. That's something to look forward to, or maybe not. So far today, indecision based around yesterday's range, looking much like an indecisive spinning top right now. The next chart to look at is euro sterling. A fifth bearish crow yesterday and a really interesting first close below the highlighted neckline of the March to April 2020 head and shoulders top neckline. That's currently at 89.24. Now, as I've mentioned before, we have a possible extended, if imperfect, sideways triangle formed since April. It's not wholly verified, but it does have an aesthetic quality about it, despite the overhang of the double top formed in mid-December. Now, the lower triangle uptrend proxy is the same as the March to April 2020 head and shoulders neckline previously mentioned. One other important thing to consider, currently below we have the key 50% Fibonacci line of December 2019 to March 2020 move at 88.89. Whilst yesterday was the first dip below the neckline since May 2020, the more interesting point is that though the 50% Fibonacci line has been breached, it has not seen two consecutive closes below it since the same May 2020 period. Yesterday we tested down to it but pulled back up and away. So far today, an open below the neckline and a tentative dip once again below the 50% Fibonacci line. The market is pulled back up so far. The next chart to look at is the US dollar against the Indian Rupee. An unusual pattern yesterday. The market initially gapped lower, then filled the gap, barely, before forming an indecisive doji cross. Despite this, the market maintained its position in between the old broken 2018 today uptrend, currently at 73.33, that sits above, and the more recent 2020 today uptrend, currently 72.88, that sits below. So far today, a really interesting day. A drop down to approach the 2020 uptrend, but not test it as yet, whilst at the same time test yesterday's high. We could all be in also for either an outside day or a key reversal. Now watch carefully as closing below 73.16 or above 73.22, and we'd just about have that as a key reversal. The final chart I'd like to look at is the US dollar against the Brazilian real. A small follow-on lower to yesterday's large bearish long black Mariposa. The market punched down and out of the previously highlighted congestion between roughly 5:30 even and 5:45, and just about closed outside of it as well. Now, speaking of closes, 2 days ago, the market halted at the descending short stroke medium moving average, currently 530.20. Yesterday, prices punched down through the moving average a distance, but also barely closed below it. All this goes against last week's weekly key reversal up, though not by enough to fail it yet. Well, that about wraps it up. So good trading and stay safe in the markets and in real life.